And everybody,
Good
halfway through
morning.
the week. Is that really right? Wow.
Good morning.
Weeks pass by fast, don't they? Oh,
Woohoo! Here we go.
enthusiastic crowd here.
Very enthusiastic because it's a
This
big,
is
big,
like
big,
this
big day
this
in
is
the
like going to
markets.
New Orleans Saints game.
Or New York Giants game, I guess, when they play Philadelphia. Nope, Bob's
There you
not
go.
on yet. That's good. Well, we're going to have a good, interesting day today and lots to talk about. There's so much, there's so much going on. It's amazing. So let's get started here. 7:32. We'll get rocking because it's always fun. The futures are up slightly. Okay. Lots of stuff today. So yesterday, the Dow Jones closed up 0.84%, the Nasdaq 0.8%, and the S&P up 0.23. Continues at all-time highs. I think 3 days in a row of all-time highs, which is interesting. A lot of that came from yesterday. NVIDIA had a big conference in New York or Washington D.C. And they had a lot of partnerships. I can't even keep up with all the partnerships. They took a $1 billion stake in Nokia. Nokia went up 22%. After the market closed, they talked about a deal with the Commerce Department to develop 7 supercomputers. I think a lot of the quantum computer stocks went down after that. This is on top of, I got so many, a $5 billion Intel partnership, 100 billion in OpenAI, 500 million in Wave. And then they also talk about partnerships with Palantir and Uber. So they're throwing money all around everywhere. And I'm going to have to kind of process this in my head and that circle of influence of money going here so you can buy more of my chips here. It's amazing and just it's a lot to look at. So, but anyway, that caused all the tech stocks to go up. The Mag Sevens, if you we'll look at the charts. You know, we were going sideways for so long. I said we needed a catalyst, and here's the catalyst. Now, on top of that, you got, the earnings are coming out. So we've already had Netflix when Tesla came out, and there were some misses on those, but Tesla has come back, Netflix has not. And today we got Meta, Microsoft, and Google after the bell. And before that, we got the FOMC coming out talking about rates, and they're expected to lower it by a quarter of a point. So we'll see if that happens or more. I don't think more is going to happen. And then we're going to see if they're going to stop, on the tightening of their balance sheet, see if they start printing again. And we'll see how that goes. What else we got? Oh, the other thing that was big yesterday was the amount of layoffs going on. UPS came out and said they're cutting 48,000 jobs. Okay, that's twice of what they had planned. 14,000 management jobs, 34,000 operations, which is the drivers and the people in the shops. They've got an elimination of a lot of buildings and real estate. So when you look at what happened, they looked at lower volumes in Amazon. Amazon kind of cut their volumes, and then you talk about Amazon laying off with 16,000 also as they update their distribution facilities with robots, and they update their administration with AI. We also saw Target cutting 1,800 corporate jobs. Okay, those are white collar jobs. Again, Amazon 16,000. Paramount is cutting 1,000 jobs. And we've talked about this before. I've been talking about for a year that kind of the last leg of the 3-legged stool is if people start losing their jobs, they're not going to pay their mortgages. They're not going to pay their student loans. They're not going to pay their car payments. We're already seeing that in the subprime. Okay, so I keep that in the back of my mind. Meanwhile, I watch the stock market make record after record after record. I'm going to talk about that a little bit here in a second. But again, Palantir and Uber in partnerships with NVIDIA. When you look at the job market, I dug in a little bit more. This year, prior to yesterday, companies have announced 946.5 thousand job cuts and that's a 55% jump from the year before. It's the highest since 2020, which was the pandemic. What else we got?
UPS was double,
Yeah.
43,000 jobs, and that they already released all these people, according to what I heard yesterday.
Yeah, it's supposed to have gone out Tuesday, 48,000 job cuts. Yeah.
So my question is, why hasn't the unemployment gone up? Where because I know why. Because they got severance, these people. That's
Yeah.
what it is. Yeah.
Well, that's
Okay.
part of it. And I'm not sure, and I've said this for a long time, I'm not sure I trust any of that unemployment data coming out, because if you dig into it, you know, if you have 3 part-time jobs, you're counted as 3 jobs, so it's
Oh
it's
yeah.
it's fudged a lot, Bob.
Yeah.
And I think,
I know
yeah,
it's inaccurate, yet, and that those job numbers are based on a company reporting information. What they see going forward.
so I see, one thing NVIDIA talked about yesterday was they're manufacturing chips in Arizona. They're assembling servers in Texas. They're producing network equipment in California. So they are starting to move factory work back to the U.S. pretty quick, when most people thought you couldn't do it within 5 years. NVIDIA is doing it through these partnerships too. So today, we're really looking at this market. It doesn't really match the economy that I'm seeing, but that's just me. So we have hope with this U.S.-China trade talks that had, president's gone through and signed, multiple deals on trade and rare earth metals and things in Asia. And now he's going to go talk with China tomorrow. We have the FOMC lowering interest rates, which excites the market. We have this AI enthusiasm, with the earnings today, and we'll see. If I'm just waiting, if Meta or Google or Microsoft doesn't hit, or if they look like their spending is not going to be monetized in a short order, that could flip them. Okay, I'm not trying to be a naysayer. I'm just saying what could happen. We got 5 companies in the Mag 7 that are gonna report, and we'll see what happens. So I'm going to sit on the sidelines and wait, because it's a crapshoot. I've got money, and I'm just gonna wait. Okay. You'll see that in my lack of trades, because on the other side, I'm seeing increased layoffs, cooling job markets, subprime auto loan crisis, a cooling housing market. In fact, I looked, and the search for help with mortgages on Google is at a level not seen since 2008, which is a great financial crisis. And then you think about 65% of people live paycheck to paycheck, and they've maxed out on their consumer debt. So happiness on one side, we're looking at the AI push it, and on the other side, we're seeing the consumer really, really being squeezed. So just take that into account. And why is this happening? And I'm looking at, we talked about it before, and I put it in my office. You can go read it, but the S&P is hitting records, but why? Well, it's because the market's being driven by a concentration of the Mag 7, basically. And you can look at market breadth just yesterday. And market breadth, just how many companies are advancing, or how many companies are declining. And yesterday, third day of record indexes. But the NASDAQ only had 39% of their stocks, 39 out of the 100 advancing, and about 60 were declining. Okay, so the NASDAQ closed a record high for their third day, even though a majority of their stocks within the index were down. So when you see a record high negative breadth, it means that while the NASDAQ is up, the majority of stocks that make up the index are actually struggling. So it's showing extreme concentration of scale that's hitting historical records. And we can also see that when Trent puts up, the companies under the 200, the companies under the 50. When that starts going down, that's another indication of market breadth. So this is a rally, which we've all known, that is not widely a wide rally. Okay, this is being run by an AI technology rally, which is okay. It brings it all up. But if any of these guys trip up a little bit, you just got to be knowing the signs and be ready for something like that to happen. When I look at what I've done, I told you at the beginning of the week, this is just not a week I'm really ready to trade. So I put out some stocks, that had good charts, but when you have a rally of 7 stocks and market brought down, you have kind of a broken market. And when you have a broken market, you can look at charts, and the charts that look backward are going to be hard to follow. So that's why I've tried a couple of times on Intuit and Franklin Resources to get in, but missed the buy. So I'm just going to let those go. And then the other two that were on there, American and Allegiant, I really didn't get into. Allegiant hit the IRL. I had no bid. So this is one of those weeks you have them on your watch list. But for me, I'm just not going to get into them because it's the way the market is. And plus, I know some known market conditions that we're going to have the FOMC rates, and we're going to have all these earnings from the Mag 7s. I just don't know what they're going to be, and I don't know what the effect on the market is. If they come out good, the market's going to go up. Fine, I'll jump on the train later. If the market's bad, they're going to be down. That's fine. I'm sitting in the station waiting for the next train. When you look at our under the 200s, tried to get into a few that would have got in. International Flavors finally got out of that one. That one came down. We got out with a 1.61% gain. When you look at Quantum Building Products, got out of that one. It hit the 2% level in mine, which was only $32. So got out of that one. And then still kind of in the Weyerhaeuser one, it's down about 0.63. But we'll see what happens. And the rest of them, Dow, SPAC, BBWI, these two hit intermediate resistance levels. So it took it right off the list. And Dow just didn't get to where I wanted it. So really, I've not traded that much this week. I don't want to trade that much. And I wouldn't have traded that much. So I'm staying on sidelines, kind of what I said. But again, this is a watch list and a trading guideline. So you can see what happens. That's why you got to be careful. Now, if you might lose $47, that's fine because we made 91 the week before, 919 the week before. And so you have some of these weeks, and this is just one of those market weeks. Well, let's go look at where we are today. And look at some charts. Here is the Dow. Okay, the Dow is going to open up a little bit higher than it closed outside the Bollinger Band, right above it. Okay, we got all these indices that were kind of sideways before, and now we've got into the week of earnings, and we've got into the week of rates, supposedly coming down, and all this news about AI, and it's really rolling up. Okay, so nice swing trade here. You're above the 9, above the 20. We got right here. We crossed over on the MACD. Just classic. Everything's fine. You're outside the upper Bollinger Band. I wouldn't buy in outside the upper Bollinger. That's just me. And I don't have any resistance level, up at the top. I do have, move this up. This is where the sell orders are. So you see sell orders are a little bit higher at 483.09 right now. That's kind of where the market sees the sell orders. When you see the SPY, okay, this has 40-some%, of the Mag 7 run the SPY and open up a little higher outside the Bollinger Band, just like the Dow. I got some sell orders up at 694. Again, crossover the MACD. It's right here, and a nice little swing. Okay, on the S&P, but continuously up. We were sideways for a while. Now we got the catalyst to move it. And what's going to happen? After when earnings come out, I don't know. Let's look at the Qs. Second verse, same as the first, looks exactly the same. Okay, this is 50% of the Mag 7 run the Qs. Okay, you see, same thing. I spend much time on that. Gold, interesting thing, gold's kind of up today. The market's up, and gold kind of swinging back up a little bit. Here's where we closed, and we're going to open right here, right under the 20. Still, the oscillators don't look good as far as, swing back in. We're still under the 20. We're still under the 9. You got resistance above you, but a little bit of a bid on gold, a little bit of a bid on silver. Then open up a little just right below resistance. Again, the oscillators don't look all that good on silver yet. Bitcoin. Bitcoin's still maintaining right here between the 110 and 115 level, trying to get past this sideways move in 50. Bollinger Bands have flattened out, so that means we could be moving sideways a little. You're seeing the oscillators are still good. A little bit of a dip on this on the stochastic, but we're still above on the RSI momentum. So again, we're rolling here. What's going to get it to pop up? Maybe it's the rate cut today. I don't know. We'll see. But it's still maintaining between 110 and 115. And you look at the IBIT, which is the ETF. We've come back up over the 9. Gapped up above the 50 and came back down, found a little bit of support right at the 50, but you have resistance right above. Starting to see a turnaround here on the MACD too. We'll see what happens through the rest of the day. MicroStrategy has earnings tomorrow, so be aware of that. Again, we come back down. We're going to open right about where we closed. We're under the 9 again on MicroStrategy. Ethereum, right above the 9 still, about where we closed the other day on Ethereum. Again, we're seeing a little bit of turnaround on the stochastic, but kind of a sideways pattern. But we're seeing the Bollingers kind of parallel in. You normally tell us we're kind of consolidating, or that's the direction we're heading. Look at NVIDIA. This is a big one today. They came out, with all the news, and now here we go, up. Now we're going to gap up. Here's where we're going to open. Last I looked, around 208-ish. That could have changed since I looked, but all the oscillators are going, and we'll see what happens. And this is a big run. I mean, when we're talking about, we were sideways. The same with Meta, who is going to announce after the bell. Kind of looks, yesterday and today, we're kind of sideways. So people are looking at Meta right at the Bollinger Band. You're not seeing that big pop, but we did come up above the 50 and above the upper Bollinger, and the oscillators still look good. But we haven't seen the bid come in here and push this up in anticipation of their earnings. The other one from Microsoft did get a nice push up yesterday, way above the Bollinger Band, right up to about resistance. We're going to open up again above the Bollinger Band. So there's some anticipation on Microsoft. People trying to get in ahead of the earnings. You see, we came all the way up, wicked up, and then we ended at the low for the day. We started up and went up, ended at the low for the day on Microsoft. So some people took some profit out of that. And then the last one, Google, who's going to also report today. You see, this has been building up till earnings, but we're right on resistance, and then you've got sellers right above that. So got to get past that resistance. And is it going to be earnings that gets it past, or is this going to be earnings that make it pop back down? And we'll see. We'll know in about 9-10 hours. Tesla's had a nice comeback since its earnings. It kind of opened here and then came back up and closed above where it closed, and then it just keeps rolling up right at resistance on Tesla. And today we're going to open up just a tad above resistance, but we've been over there before. Amazon reports tomorrow. Again, some anticipation on Amazon. We're going to open up right about where we closed. It came up, popped right off resistance, wicked both ways, kind of indecision, kind of in the middle here. But the oscillators look good. It looks like it wants to keep going up. It's had a nice run up. You got resistance here, and again, we'll see what happens with the earnings today and how that affects Amazon's earnings tomorrow, and then tomorrow they'll have their earnings. Again, I don't. All I know is they're going to have earnings. I don't know what's going to happen to them, but I always get out when I'm trading before earnings. If you are investing in them, especially in NVIDIA, you've got probably a really good profit. Even in Amazon, if you use the 200, you're above the 200, so you're still doing well, as an investment. Palantir got a little bit, we were sideways for a long time, and it's starting to pick up just a little bit of a bid, probably with these technologies. And then you've got NVIDIA that struck a deal with them to do some type of deal. But we're still right up here hitting resistance. And maybe we'll see it pop after earnings today, of the three Mag 7s, but still, up right up on resistance. Netflix, this one has not recovered from its earnings. Here's your earnings. Pop down, we're under the 200. We're still just maintaining a sideways pattern, but we did get back inside the Bollinger Band. We're still not looking good on the oscillators down here on Netflix, but we'll see. This could be a possible swing. We'll watch for the 9 to come down. see if we can get above that 200 and roll back up. But right now we're not there. IBM, I'm just going to go through a few that aren't on. IBM's come right up to resistance. It wicked up to where sell orders are and came back down. So 2 days right on resistance after these big candle moves on IBM. We'll see if today's earnings, moves them up anymore. United Health had a big pop. Remember when earnings came out? Opened up right here and then closed back down. That's about where we're going to open, right back in line with where we were. So a nice pop up. See if anyone, got rug pulled on that one, but we'll see what happens with United Health. We're still, if you look at the MACD, we never did cross the MACD, for confirmation to get in on a swing trade, even with this big bump up, and then it came back down. So again, United Health. So, and then SMH. I'm just looking at this one because this is a semiconductor ETF, and NVIDIA is huge in that. We're seeing a nice run on semiconductors. No real resistance other than sell orders at 372. On the watch list, there was nothing in there that even came close. INTU, I'll just show you the ones that into it, tried to get into it right at this level, never did hit. So I'm going to just let it go and not worry about it. And then Ben, which is Franklin, tried to do the same thing down in here, but it never came down and hit. So didn't get anything into those. IFF, only under the 200. Now we got in. I don't even know where my cost basis. Well, my cost basis was down here in the 50. Came up, and it came back down, and then we got out right at this level right here. So we were up about 1.61%. NX was another one that we've been watching for a week or two. It came up, came back down, got out of that one. We were out about 0.2% or 0.02%. And the rest we just didn't get into basically. Oh, Weyerhaeuser. Weyerhaeuser was another one. Probably got in right about this level. We're right about where a little bit lower in cost basis. If that goes down below there, I'd certainly get out, with a small little loss today, and we'll see what happens. But otherwise, I'd try to get out of this one for the week. What else we got? Earnings. UPS had earnings. We talked about them laying off 48,000 people, went all the way up to the 200 and where resistance was. And then we come back down, after the earnings announcement, but, nice gap up on UPS for showing that their U.S. market is down. And think about, they're laying off 48,000 people. This is a shipping company before Christmas. Okay. Their biggest season. Normally they're hiring, so think about that in the big term of the economy of the U.S. and what that might mean. I'll just go over to FedEx and see what happened. FedEx came up along with UPS right along the upper Bollinger, but I would imagine, and I haven't looked into it, but I would imagine that FedEx also is probably seeing less packages coming into Christmas, but I do not know that for a fact. SHW, Sherwin-Williams came out with earnings. Nice pop up. Look at that. Think about if you chase that up, and then got back down and closed down. So you opened here, went up, came back, went down, and right here. So it's a nice gap up, but some people chased it and probably got rug pulled on Sherwin-Williams. I don't even know what they did or what they said. $3.35 per share on the earnings.
That doesn't make any sense.
No, it really doesn't, but I don't know. I didn't look at it. Here's Novartis had earnings and down they went a little bit. So all I'm saying is there's a lot to be had today. And for me, there's too much unknowns on what's happening with these earnings. And they can, we saw it. Earnings can either pop up, it can be good. We're going to go up 15%, or they're going to be bad. They go down 15%. If you get one of these mags that goes down or doesn't meet or doesn't have the right guidance or can't figure out the monetization of all the money they're spending, what's that going to do to the rest of them? So I kind of leave that open for discussion when we start discussing after Trent, but it's going to be an interesting day, and I'll be happy to sit on the sidelines and watch it happen with a popcorn and a cocktail. Go ahead, Trent.
All right. So just give you some ideas on resistance levels and support levels based on the options market, SPY. This is 690 is a second tier resistance level, we look to open up at 688.73 right now, pre-market. So right just below that 690 level, but the highest level is 7,000. So we've seen that inch up over the last week or so. Where things can get ugly is below 683. We would see an acceleration in volatility. That can be good, that can be bad. It just depends on the momentum of the market overall. And then we got support at 660. So looks to open with the excitement of NVIDIA and all the news that they're putting out there. Their bookings for what, $500 billion in chips over the next 5 years. And remember, they're just bookings. You can cancel bookings. So just keep that in mind. So a lot of future potential, but nothing's been delivered and money hasn't been exchanged yet. So just keep that in mind. We'll go look at the Qs. Similar sort of situation. High end resistance level is about 650. That's where the market makers are pricing in resistance, as well as 640 and 635. We look to open up at 635.44 today. So right at that level right here. Oh boy, my computer just froze. Are you?
I feel for you.
Did it? Yeah. Am I moving again?
Yep.
Okay. So 635 is right at resistance. It's a third tier level resistance, so not really strong, but you get into about 640, there's a second level, and then the highest level resistance, 650, where things can get ugly at 619, and then your bigger support levels at 600. So we're seeing this is crazy. These big, gaps, big opening gaps each day for the last, well, 1, 2, 3 days. That's suspect. I think I would just pay attention to that. Why is that happening, kind of thing? That's not natural. We don't see that back here. Why is that happening? So just ask yourself that question, investigate it. Russell 2000, we've come back down towards the flip line where things get ugly about 248. So volatility's increasing in the Russell 2000. We have a second tier level of resistance at 250, and then the main resistance level at 255. But it seems where this 250 level is becoming a pain in the ass for the Russell 2000. So um, I would suspect we could potentially see a pullback. We're supposed to open at 248.88, excuse me. And we have a support level, a third tier level of support right around 245, then 240. This sort of, to me, the way I'm interpreting it is small mid cap companies are higher risk than mega cap, blue chip companies. So what's the market telling us about the small and mid cap company world? Well, we're seeing big layoffs in one of the mega caps, UPS. We're seeing layoffs in Amazon and all these other companies. What are these guys doing? Are these guys hiring? Are they laying people off? Have they been laying off? Are they at bigger risk than, say, the big guys? And I would say, based on what I'm seeing here, we're seeing more risk there. Um, Gold, this is one we've talked about a handful overall. It has moved up today, found support at about 395, 3,951. Today it's up 1.73%. These are gold futures. So we're seeing a possible turnaround in gold. Maybe we'll see. Could be a sucker punch. We'll see. But I think with what about to show you here in a second, let's just look at percentage of stocks over the 20, the 50, and the 200. 50% of stocks are over the 20. We've seen a rise up here since the 10th of February or 10th of October when Trump came out with that tweet or whatever he calls that now about 100% tariffs on China. Um, it's moved up. We're at 48% of stocks above the 50, and then 58% of stocks, roughly 59% of stocks are above the 200. So we're still holding our ground here of number of stocks above the 200-day moving average. Um, just keep an eye on this. When we start to see this 200-day moving average numbers start to decline, like we saw back here in February, around February 21st, we had a massive drop, and then it accelerated into the 8th of April or 7th of April. That's keep an eye on that because that's a turn in the market. We want to see a big candlestick like this here that we saw on February 21st, where we have a big drawdown. That's sort of that starting of that avalanche effect. But we're not seeing it right now. It's just sort of holding its ground right now.
Kind of
The
looks like
VIX is
3 days of drops, isn't it? Pretty much. Kind of
yeah,
three drops in a
one,
row. Two,
yeah,
three. Yeah.
Friday's Monday
Yeah.
today, or
It's part of
yesterday.
that
So
market breadth. Yeah.
yeah, not I mean it's not gigantic yet, but you know, neither was this back here. So
Yeah.
um
Exactly.
these are things that somebody comes out with bad earnings, something that the VIX volatility index found some legs yesterday, was up what was it, up 3.86% after a number of days of heading downward. Today we're up pre-market basically 18 basis points, not much, but something to keep an eye on. We see these big spikes. When we see these big spikes, that's typically, when we see stocks fall. Right now we're in that investable bucket. So keep an eye on that, but volatility has gotten more active here recently. One thing I want to show you all is this. This is the mortgage, this is the overnight purchase agreements, mortgage-backed securities purchased by the Federal Reserve in temporary open market operations. What this is the Fed has this window where banks or instant banks or countries can come and overnight exchange certain securities. Treasuries, U.S. Treasuries, mortgage-backed securities are the two biggest ones. Okay, so we're seeing here is, if I can span out a little bit in time, is we have seen, okay, let me back up. Why would a bank go to the Fed overnight window and exchange their mortgage-backed securities or US Treasuries to the Fed overnight in exchange for cash?
Liquidity.
They're afraid of default.
Liquidity, right? Like
Yep.
Friday night for Mark at the bar, liquidity. It's all about
That's right.
liquidity,
That's right.
right? Okay.
Normally with your Coors Light.
Okay, so if I span out on a monthly chart, you can see since July 1st, 2020, liquidity hadn't been an issue. Maybe on September 1st, a month of September in 24, just for a little bit, but there hadn't been a liquidity problem. But if I go
It's
back
not,
here to 2008,
I mean, it's
boom,
not only liquidity, it's risk management on these banks. I'm going to give you my faulty loans potentially, and you're going to give me cash for them.
right. We see in 2020, we need cash. This is mortgage backs. Okay, I'm pulling this piece out because this is the biggest risk element, because if my mortgage-backed security bond does not, if we see defaults escalate, I'm not getting paid my coupon, right?
Yeah, but
So,
you left out a word called swap.
Yep.
okay, so you're not getting paid, right? So the banks in this case, this is the month of October. We've seen a spike, roughly seven last night. If I go to a daily, last night, big night, or excuse me, Tuesday night, 7.75 billion were swapped out. So I'm going to the window. I say, here are my bonds. You take them. I'll take the cash. Now, typically there is a re-exchange of that, but sometimes they don't show back up to re-exchange that cash for those bonds again. Think about it, it's an overnight thing. The reason this is there is to create liquidity for banks or accredited institutions to have liquidity overnight, and then they come back and re-exchange that back for those securities, um, as that's their collateral. Well, if they don't come back and claim them, the Fed's sitting there holding it, and it's a sign of possible a liquidity event, a liquidity crisis, and that's what we're seeing here. Um, Total purchases. So you can see the majority of Tuesdays was the mortgage-backed element, not treasuries. So we're starting to see a lot of activity since, let's just go back to September 15th in this window. And this is something that this is part of your risk management process. You go out, you look and see why. Why would they be coming to the window and exchanging assets for cash? It's because they're tight on cash. And so then you go and you look at NVIDIA. This is NVIDIA yesterday, up 4.98%. That's out of its typical standard deviation range, which is roughly 2.5%, 3% on a daily average. Okay, that's how much percentage movement you'll see. Yesterday it was 4.98. Was it because of all the news? Possibly. Was this a the last vertical push by institutions like we talked about with gold over the last couple of years, this sort of stair stepping? Has this been an accumulation phase for institutions? They've been right in this range between since July 31st to here. And then we have this massive breakout. Possibly we look to open at 208. Yeah, $208 and some change. That's another big push higher. So we're going to gap up in the opening right here where market makers are placed resistance is at 210. Okay, that's as of last night or this morning, they readjusted their positions. You've got a flip line where things get ugly about 178. So we're really far away from that. What I've noticed is in the options market is the activity on the November 21st 190 put contracts. And yesterday, as NVIDIA was heading up in the last hour or two, there was more volume, more activity in purchasing of these contracts. Now, November 21st is when they will expire. And but so I'm looking at it going, okay, is this institution saying that's that's my new floor? Is that where I'm placing my new floor? Or is this a speculative opportunity that NVIDIA is going to hit 210 or a little higher, maybe 215, and then push back down towards 190? And so that rug pull downwards, and these speculators are saying, hey, I'll capitalize on this by buying 190 put contracts going out to November 21st. Now, if I remember right, NVIDIA reports earnings on the 19th. So they'll report earnings before these options expire. So I'm looking at this going, okay, where's this? Is there an opportunity here? Is there opportunity to capture some downside in NVIDIA in the coming weeks? And so I'm keeping an eye on these massive moves up in NVIDIA because at some point, like this, the SPY and these gap ups, eventually this isn't regular behavior. This is something suspect. And so keep an eye on this. And if you're in NVIDIA and you get these gapped ups, look at what is your risk management process? What are you going to do to preserve those profits if NVIDIA reverses course and heads back down towards 190 or so? Are you going to capture it? Are you going to ride it out? Is this a long-term play? I mean, NVIDIA in the long run, yeah, absolutely. But in the short to intermediate term, I think there's some news that's coming out that I'm going, yeah, but that's not revenue that hits your books today. That's revenue that's projected to hit your books in 5 years.
Oh,
I don't
guidance.
know about you, but my life changes a lot in 5 years, really in about 5 days.
5 minutes for me.
Yeah. So keep that in mind. So anyhow, all right, we'll open up to the floor for conversations, charts, and all that fun stuff.
I'd like to hear, because I'm not in NVIDIA or any of these. And like I said, I'm just going to sit and watch because I don't know what's going to happen. I've seen this before, and I'm very conservative. I already have my assets, and I don't want to lose any. And if I don't get the gain, that doesn't kill me. So I'd just like to hear anyone else what your thoughts are on today. You know, we got FOMC, we've got all this earnings coming out. We've got NVIDIA skyrocketing with partnerships with everyone under the sun. I hear you had a partnership with Bob's company coming up, NVIDIA. So anything.
Dave's going to pass the cash to me.
Yeah, yes, okay.
I want to get into that circular movement there.
Yeah, I agree with
But
that.
it needs to stop here at my desk.
Yeah.
I'm not fully in. I'm in partially, but I'm not. I don't know. I'm very weary about the market, because at any point it could just keel over. This like too many indicators, but I think we're going to get through the year. That's really what I think. I think it's going to get pushed through the year, and next year is going to be the year to review and look at.
What happens if one of these earnings today falls short on any of these companies?
I don't think they are.
But what if they do?
If they do, you're going to see.
Just one.
You're going to see. My opinion is you're going to see a pullback because the market is very frail and very teeter-totter right now. So I just either keep stops on your investments or keep your eyes peeled on the market and what's happening. Have CNBC in one ear, you know?
Yeah. I think one of the things I think about is the amount of negative
Depends on who you
feelings
talk
in
to.
the
You talk to
marketplace.
Paul, it's nothing negative.
Well, but I'm not talking about, I'm talking about the news. I'm talking about um just overall, like this is or this is so bad, everything's bad, and this, that, and the other. And I look at it from a contrarian standpoint, which I think we all should just question ourselves at times. And I go, this is what pushes markets up. Is that negative, what is the climb the wall of fear, right? And then it all of a sudden melts. And I think that's, look back at the great financial, the dot-com bubble. It was this is ridiculous. The price earnings ratios on these companies is outrageous. They don't make any money, yet everything's stacked up. And then one event turned the whole thing. Same thing in the housing market. I'm making money. Housing market, this is ridiculous. These prices, I flip a house in 60 days or 30 days in a lot of cases. That euphoria or that fear element, sometimes a lot of times drives markets higher. And I think that's where I look at this and I go, we're in this environment where I'm hearing more banter about fear and like little things that are showing up, job losses, that and the other, and yet the market keeps going up. And I believe that is that whole suck them in and then pull the rug out. And that's something will come about. So just be aware um, of the amount of negative news you're hearing and what that psychologically, that it's a reverse kind of a event, in my opinion, from what I've seen in the past.
I don't think I'm not hearing much negative news except for you and me, maybe Bob. But if you go on the financial channels, I don't hear this.
I'm seeing it more on X than I have in a long time.
Okay. Well, maybe there, yeah.
Yeah. I mean, I'm seeing more and more. Look at this. When people start talking about reverse repo, I'm like, wow, okay.
You know where I've seen it
This,
is people like Jamie Dimon and Paul Tudor Jones, those guys, when they come out and start saying it, my antenna goes up a little bit.
yeah,
Well,
well, it goes up, but also the market keeps going up.
Well, I
So
know.
it's limited though, right? The market was the S&P wasn't going up for a long time while techs were like going through the roof, right? But that's that has come to a close now with the tech. The certain techs are taking off, but it's cautious, right? Like this deal
Mag
with
7.
Palantir and Nvidia yesterday. Nvidia Palantir didn't even move yesterday. Like yesterday was the day to buy Palantir. It's been moving sideways.
Oh, yeah.
Today it's moving. I don't know what it's at now, but it is moving.
Well, it signed an agreement with NVIDIA. So NVIDIA's spreading out its web a little bit.
Well, also look at the jobs. The jobs is a big deal because that means people stop paying things, right?
Absolutely.
I
Yeah.
mean, UPS went from 20 some odd thousand to 46,000 and they've cut those already, right? I mean that's astounding, that number. And then you have all these other companies announcing, Amazon said they're going to release 30,000. Now it's 16,000, not 30. But those are corporate jobs. Those are not warehouse jobs. Those are six-figure numbers.
Yep.
And the
Well,
list
you
goes
had,
on.
Target cutting 1,800 corporate jobs, Paramount 1,000 jobs
Mhm.
just yesterday.
Yeah. This means that money is not going to be flowing into into the markets. I'm not talking about the stock market, but purchasing, right? How do you buy food? How do you pay the mortgage? How do you pay the car payment?
So
A
what are you seeing?
lot
What
of
are you seeing,
people,
Bob? Are you seeing any changes in your business or just steady or what?
it's it's up from 3 months ago. It's been up the last 3 months.
That's even
But
with tariffs, right?
yeah, but we're absorbing the tariffs. We haven't passed that on. We're just absorbing it. And I think that most businesses are doing that. They're just waiting for the markets to take off. But I don't think that's going to happen. At least not in 25. I'm waiting to see what happens in 26. Now, if everything falls apart, then we have a big problem.
I know UPS was passing on, according to what I read, their increase in cost,
Oh,
but
yeah.
that also countered out how many people are using them anymore. That went down in the United States, the amount of
But
people using UPS.
it's not even them.
And
It's
I got
also
nothing. I got
USPS.
nothing against UPS, but a couple of friends of mine are drivers from UPS, and they make six figures to drive for UPS.
Yep. 150, $200,000, depending on how
That's
much
a
work
lot.
it's going to be.
That's a lot of money for not discounting drivers, but for drivers.
Yeah, and they're offering the older guys a buyout.
Right.
So it's big numbers. I don't know. I don't know where all this all lands. But
I
I
I think it's
know I'm with you, Mark. I'm trading cautiously.
Yeah.
yeah. I think, and the thing about this is you think about the ramp up of negative of these issues. Um, Looking back in history, we could continue to see this run for a year,
Yeah.
and that's the thing is you just don't know what would turn it. And at some point it will turn, it always does. Um, but it could be a continuation of just we could see the increase in negative news or negative events, negative data. Um, Yet things just keep going higher. I mean, I think it just keep this on your radar, not to be always, chicken little, the sky is falling. We just need to keep this in our radar because if we ignore it, this is when you get taken out to the woodshed and you get beaten. And
Well, I mean,
I don't want to see that happen.
I've seen it happen. Like I said, my first one was 87, and that was a big one. I was young then. I was in 20s, early 30s. Um, and I've seen it happen in .com. I was in the business, .com, a great financial crisis, and I saw people get blown out of the margin. You got to remember, we're still highly leveraged, even as retail customers right now are highly leveraged, especially in these leveraged ETFs. And if something turns, I'm not saying it is, you just got to be careful. got to know what you're in. It can really wipe you out. And if you're on leverage or you're on margin with a brokerage account, you'll lose your house, you'll lose your car if you don't have the money to pay up on that margin account. So that was the biggest influencer in my entire professional life in financial services. Is I hated seeing retail get wiped out, but it was their own fault. They fell for what Wall Street was feeding them. They went in all the way. They made some good times for a while, and then it all fell apart, and it ruined a lot of people. And people didn't get back in the market from the great financial crisis until about the pandemic, when they had nothing else to do. And I respect people like, Bob, who lost it all and came back and made it back, because that takes a lot of resolve to do that, especially when you've been kicked down and beat and thrown down the stairs. So a lot of people weren't able to do what Bob did, and it really hurt their families and their businesses and their relationships. And I don't want to see that happen to any of our members. So I will always
So-
be there protecting.
Never
So Bob-
forget.
So
Yeah.
Bob is a fighter.
Is that Willie?
I said, good morning. I said, Bob must be a big fighter, a strong fighter, a courageous fighter, never surrender.
Never surrender. That's right.
Yeah, right.
So I wanted to respond to Jay's Raymond's comment here. I am in the industrial industry, and I will tell you that the industrial industry is suffering. Okay, take a look at Fastenal, take a look at MSC, take a look at any of the worth fasteners. I mean, just go down the list. These are the guys that provide the parts to build these buildings and expansion. It's what you're bringing up is not going to be real until another 3 to 4 years, maybe 5 years. It's going to take that long to get buildings built and get factories up and running. And you need people with skill sets, which we don't have. So if you think this is happening this year, it's not. Yeah, it's happening in the data centers, because you don't really need people other than construction workers to build them, and they can ship them to any state they want as long as they pay them well. So what you're stating here, right, Jay, is that this is something that's not going to happen, is not happening, because if this was happening, I wouldn't have a fastener on the shelf.
Yeah. You're seeing the data center down in like Abilene. They're building the OpenAI one. We have friends who live about 30 minutes from there, and they're pouring more and more concrete, but that's one data center versus, like you're talking about, like a bigger span of building. We're just not seeing as much of it. So I think that's, something to consider is the build out is a very narrow way, piece of the pie that we're seeing, comments and interest in building, and that's really the data center world.
Can I throw a little comment in, guys?
Absolutely.
Yeah, please.
Well, Margaret, how's it
Where
going?
you been hiding?
Well,
Yeah, I haven't seen you in a while.
well, that's what I was going to throw in. Work is so busy. I am the medical director for an athletic training company that staffs construction sites. Our business has gone through the roof. We're hiring another doctor. So this whole disconnect to me is just, I don't know what to do with it. I'm with Mark sitting on the sidelines, but we can't get enough athletic trainers to cover what they want us to do. So
Wow. So from a
What do you
medical,
mean by, I'm sorry, what do you mean athletic trainers?
okay, so athletic trainers, like the kind that are on the sidelines for sporting events.
Okay.
What these companies have started doing is they hire the athletic trainer by the construction company under the wellness protocol.
Mm-hmm.
So they're on site. They do ergonomics, stretch and flex, all kinds of preventative type things. But when someone is injured, they come to the athletic trainer and they handle the injury, start whatever's needed. The companies are all on board with keeping them on site and letting them do something, anything that stays within, say it's an ankle sprain, so you're not walking around, it's a shoulder, you're not lifting overhead. So the companies
Right.
are really on board, and it's a blast. I mean, I love it. These athletic trainers are so smart, they're mechanical, they're practical, but when we get medical issues, they're right on. I really love working with them. So that's what the model is. But
What
go ahead.
what states
I'm
are
paying
you
my
seeing?
license in 17 states now.
17. And
So
out of that 17, you're busy in all states?
yeah, we have, and what happens is we get into one state and then other people figure out what we're doing. And then we started in Tennessee, and now we have like 3 or 4 sites in Tennessee. I don't even keep track anymore. I just, I'm happy they hired a doctor because I haven't had a vacation in 3 or 4 years. I take my calls from wherever I am in the world. So
Margaret, we need to get you a Coors Light and a seat on the beach for a while.
I'm
Yeah.
going on a sailing trip in December, and it's going
I
to be
love sailing. Good for you.
perfect. Yeah, we're going on a 45-foot boat for 7 days. So
Wow. Good for
You'll have a
you.
blast. I mean, I love sailing.
Yeah.
I've done that. I did that one years ago, and I love it, love it, love it. So
The
Yeah.
phone won't work on there.
that's what I told him. I said I might have to get Starlink.
Well, so good luck with that.
Well, no, they've hired this new doctor. It was just a weird way we found him. I found him. And he's an ER doc who's also doing telemedicine, and he's not happy. So he has his license in 30 states. So he's got more than I do.
Wow, that's good.
So at any rate, that's why
That's
I'm listening,
interesting.
but I'm not here.
Well, I'm glad Margaret's been with us forever. So um, she's kind of stays in the background, but then
Yeah.
when we really get her, she'll pop on and tell us what's going on. So I appreciate that.
Well, UPS, that company is being mismanaged. I get wine sent from Seattle twice a year. They get it from all over the world, and they'll send cases. And they used to come and they give a 4-hour window and everything was easy. Well, now they send you the delivery date, and it's a 12-hour window. I cannot say that I am staying in my house for 12 hours on a random day. So then you go online in their little website and you change the delivery date and you pay money for each case. Well, then they don't show up, they lose the cases, and then they suddenly find them 10 days later. And then they give you a delivery date with a 19-hour window.
Huh.
And there's no way to change it. So I'm quitting to buy. I'm not going to buy it from Seattle anymore.
Well, don't you, I mean, I have wine shipped in and they have it shipped in with a private carrier, not UPS, but the winery uses a private carrier and they bring it in refrigerated at 55 degrees.
Yeah, this place doesn't do it. He travels all over the world and finds little out of the way vineyards so you can buy phenomenal wines. I never pay more than $20 a bottle. So
Mhm.
he's got this big warehouse in Seattle, and they used to use FedEx, which was okay. And then they switched to UPS, which was all right. But you have to be there to sign for it. And
Yeah,
it's just a mess right now. So
yeah.
I'm going to Costco or someplace else.
There you go.
So
we have the comment says, and I'm not picking on anybody, that you don't make any money, Dennis, and you don't make any money when jumping out of the market. And I understand what you're saying, but I go back and this is one of this is a monthly chart of from 2007 to 10, 11. This is a great financial crisis and monthly. And had you been in, writing this up similar to today, your high was here on the 31st of October, which is Friday here coming up, 2007. Okay. And then you started seeing this come down. So you didn't get back even again had you stayed in the S&P from 10/31/2007 until 4/30/2013, 6 years. Okay. So that's opportunity cost lost. and think about that, how far down that went. And if you were ready to retire at that point, you were a year out of retirement, and this is 6 years later. Had you even gone to the Tudor 200, you would have gotten out here on January 31st, 2008, which is, well, October 31st, 2008. This the 31st is an interesting day, as you see. 2008, which is, Friday. You wouldn't have gotten back in until about September 30th, 2000, a year. Okay. This is opportunity cost for a year of your money, okay, that you could have put in treasuries or somewhere else. So I don't necessarily agree that you should keep your money all the time. From my point of view, I was brought up that way. That's the way they trained me, market always come back. But how much time do you have for it to come back? Do you have 6 years? Do you have 7 years to get back to even? Okay. Do you have a year to get back to even?
It's already baked into the pie. I don't think it's going to move the market much.
What's that?
Okay. So let's get started.
I think he was on a radio call.
Everything you want to know.
Okay, I can't hear that. Anyway, the thing is about time. So yeah, you can't time the market, you don't know where it is or not, but you can use some technicals to help you out. Here's the 9, here's the 20 where we went under, here's the 50 where we went under and didn't get back above the 50 until this point, long term on your money. I'm just saying, I saw a lot of people that could not survive this 6 years because they were ready to retire, and then they ended up, nothing against Walmart, as Walmart door greeters, to make ends meet, just ruin their retirement. So that's when I say, yeah, you don't make any money out of the market, but you don't lose any money in this situation too. You can put it wherever, treasuries, money market, wherever the money flows. Maybe it's a data center, whatever. And, money flows to where the value is. Again, this is a broad market. And this was before we had the Mag 7s, and they had such a high concentration of the S&P. So just my thoughts on that. You guys can comment if you want. I'm not the genius here.
I agree with you, Mark. I started investing back in the 90s, right? And in my early days, I had done fairly good in my investments, but got bit during the 9/11 attack. And it literally took me 10 years to recover from that loss. Now, if you go back and if you trend the S&P 500 back to the 90s, if you started investing in the 90s, you could see it was a long, hard road. But if you started investing in 2013 even, it's been euphoria, and how long can that euphoria last? I'm with you. There's a certain amount of, in 6th grade, I took an economics class, and we went through a lesson that everybody, back then we didn't have phones, so you got your newspaper and you brought it to class with you that day, and everybody picked, I think it was 5 stocks. And, we learned buy low, sell high. Somehow over time, it's buy, 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 buy. There's no sell high, right? And
buy the dip. Yeah, buy the dip.
Buy the dip. Just keep buying. And it's a little concerning. I mean, maybe we're old school, but my lessons were learned from scabs that grew on my investment portfolio that you don't forget. You don't forget.
That's an interesting way to put it. Scabs that grew on your investment portfolio. But I agree. I'm not saying you shouldn't be in the market. I'm just saying make sure you have a plan, so you don't get stuck in a 6-year drought, where you get rug pulled and your hope comes out instead of your intellectual of when should I get in, when should I get out, because all stocks go up, all stocks go down. That's why we see swing trades up and down, up and down, up and down. Now over time, stocks have gone up, but there are periods, that it'll go down.
Mark, I think this is where, going along with what Troy is saying, that this is one 2, 3, 4 days of NVIDIA. Look at the move. I mean, from the close on the Friday the 24th at $186.26. Right now we're at $111.04. That's massive. That's massive. And when I see that, I go, what is that because of fundamentals? Is that because, or is this a exit strategy for smart money? And I think that's when you see kind of movement like that, you got to pay attention. You got to say,
Explain
huh,
that for people, exit strategy for smart money. What your thought process is on that.
smart money's accumulate, they've made money, going back, let's minimize this stuff here. And we go back here, 2023. Smart money's been making money. They accumulate, get extensions, take profits, accumulate, extensions, accumulate. I mean, it's just a process. Do they exit 100%? No, they don't exit 100%. They just take their profits on these extensions. And if you look at this, let me drop this out of here so you can see it. Look at that extension. That's a 2 day, that's 3 days. I mean, that's massive, dude. That's just massive. And so when I look at that, I go, this is that last moment. Maybe it goes to 115 or I mean 215, 230. But this is, you got to be aware, does this really make a lot of sense?
No.
What was the news that came out? They struck a deal with Nokia for $1 billion to offer AI phone services. When's that going to pay out? When's that revenue and earnings per share hit in the books? Um, they've had $500 billion in bookings over for the next 5 years. Did that money hit the books? No, it's news. It's this is the promise, but as we all know, promises get broken. And so I just look at this and I go, this behavior to me is very suspect. I just go, huh, that doesn't make a lot of sense to me. This accumulation, tight ranges, move higher, that makes sense to me. But this, I think you just got to be aware. And if
I
you
think,
own NVIDIA,
yeah.
and if you own NVIDIA since April, holy shit, you've made a ton. I
Well,
mean,
if you owned it
April,
even further back, you've made a ton.
in April, it was $97. Look at where you're at now. You made a lot of money. Institutions are taking money off the table. Just look at the
When
behavior. Watch the behavior. That's all I'm saying.
Well,
Not to be in,
we're trading against computers and logarithms that they can do some microseconds of trades, for minuscule amounts and make money. And we don't have that advantage right as a retailers. Um, so again,
yeah.
I'm just saying, be careful. If you're in it and you love it, I'm fine with that. I like it going up, and I like people making money. I hate people losing money when you get the rug pull. And Wall Street is there to take our money away. I've been in the business, transmitted the business. Wall Street is there to take your money, either fees or trading. Used to be trades, you used to have to pay for trades, and now they'll just watch it and they'll rug pull you. And I just don't
But
want that to happen to any of our members. But I want us to all be wealthy. I want us to all to manage our wealth and manage our risk most of all. And right now, I think uh, that managing risk or having a risk management strategy or plan is not a bad thing to be thinking about.
here's all, this is my final words on this. These guys have a process. They have a well thought out, detailed process of managing their book of business, managing trades, managing their intermediate to long-term positions. If these guys are spending billions and trillions of dollars to build processes, why aren't we taking the same approach for ourselves in preserving our family's wealth? Why aren't we doing that? And if you're not doing it and you don't have that written process, start thinking about putting one together for sure.
And why do they have those? To make money and to risk manage. And that's what we need to do. And that's why I say, have a trading plan, have an investment plan, stick to it. The whole idea of staying in the market, you know, the whole time I used to, and they trained us on that, you know, you gotta stay in the market. But basically what that was to maintain your assets under management, you know, as a company.
And remember, these guys also have exposure to the market pretty much through all events. You know, they do, but it's minimal. So when they get in these nosebleed areas, they downsize their exposure. That's part of risk management. Doesn't mean you're weak or there's something wrong with you. It means you're being a prudent investor. So, all right, it's 8:41. Market's 10 minutes, 11 minutes in.
Anyone else got anything? It's gonna be a big day. It's gonna be fun.
What time does the Fed come out? 1?
One,
Two.
two Eastern and 1 Central. Is that what it is?
2 Eastern.
2 Eastern. Okay. So keep an eye on that. That should be interesting. Probability on them lowering rates is like in the 90% range, by a 1/4%. So that's pretty much, I think, probably being baked into this. And maybe that's why we're seeing such gap ups in these markets today. I don't know. All right, we'll leave it at that. Have a great day. Have a
Tomorrow
wonderful
will be
morning.
interesting. I really enjoyed today's conversation, and thanks everyone for participating, you know, either on chat or online with Margaret and Troy and the rest of you guys. It makes it so much more fun than Trent and I just sitting here jabbering on, you know. So I really appreciate what your thoughts are and respect what your thoughts are. We're just here to try to be a group, and as a group, you know, help each other out and make sure we take care of each other financially and even as friends. So appreciate everything you guys do. Appreciate everyone. Thanks.
Thank you all.
Guys.
Y'all have a wonderful
Right.
morning and afternoon, and we will see
Thank
you tomorrow. Same place, same time.
All right.
Right.
All right.
Hey, guys.
Take care.
Bye.
Good.
Good loud. Peace.